You own gold because you think in the wrong, not the right, in the wrong set of circumstances, gold isn't going to go up by $100. It isn't going to go up by $200. It's going to go up by thousands of dollars.
Yes.
You own it, frankly, hoping, perhaps if you're Christian, praying that you're wrong. But you aren't owning it for $100 moves. You're owning it for $1,000 or $2,000 moves.
RickRule, a prominent figure in the world of finance and the founder and president of Rule Investment Media. In this video, RickRule emphasizes gold potential for its substantial gains, with gold having appreciated by around 500% in the last 2 decades. According to brokerage firm Emkay Global Financial Services, one asset class which has delivered exceptional returns in recent months, up 10% in the year 2023 and 23% since its trough in late 2022, is gold. In the recent past, amplified financial stress and macro uncertainty has boosted safe haven demand for gold. Rick addressed the gold rise in a single decade as a proof that focusing on small price fluctuations overlooked gold's broader potential. The price of gold increased to about $200 when the U.S. repealed its restriction on its possession at the end of 1974. After a corrective phase, it increased to $850 in January 1980. After an introduction to a U.S. regional banking crisis in March took the gold price from just above $1,800 to over $2,000, gold futures have been consolidating those outsized gains by carving out a bullish flagging pattern between $1,900 and $2,000 for the past 5 months. RickRule foresees silver as a late-cycle star in precious metals, emphasizing its global affordability. Silver is cheap gold, but the gray metal's recent resilience and projected supply deficits mean its upside could be far greater than gold's, according to Charlie Morris, Chief Investment Officer at Asset Management. Now we are presenting you the glimpse of RickRule insights from his recent interview with Mike Maloney. Before we continue to delve into this discussion, we request you to subscribe to our channel and activate the bell icon for timely updates.
If you look back only now, 23 years, in the year 2000, when gold, frankly, was a 4-letter word that nobody could spell, the price of gold was at what, $253 an ounce?
Yes.
10 years later, which is not a phenomenal amount of time, the gold price had increased to $1,850 an ounce. So people who are looking at the stuff with regards to a $100 move, my experience with silver, and I'm not sure why, is that silver is a late cycle mover, which is to say in precious metals bull market, the
Gold
trend is established by gold.
Yeah. And then it drags silver with it later.
In the middle of the up move, silver begins to move. It moves faster then and much further than gold did. I assume that's because of silver's low unit price, which is to say when the bull market democratizes and people with less means want to participate, the easiest and best way for them to participate is in silver. And I think one of the things that you see in precious metals bull markets is that when the narrative is established, not just in the United States, but internationally, that silver becomes the savings instrument for the poorest half of humanity. And while their individual impact is, of course, less dramatic than the impact of the average American, the sheer numbers and the cultural predisposition in countries like India, Pakistan, Bangladesh, Sri Lanka, China, Korea, the centuries-long familiarity with precious metals often means that in circumstances where confidence is called into question, that the unit value of silver makes it the preferred savings instrument. I point out every time I have the opportunity that the market share that gold and silver enjoys as a percentage of total savings and investment assets in the biggest investment market in the world, which is the United States, is only 0.5%, which is to say 0.5% of the total value of savings and investment assets in the United States.
And what was it back in 1980? Wasn't it like 8% or something like that?
I'll get to that, but we don't need to be dramatic.
Okay.
I mean, other than selling newsletters, dramas, the 4-decade mean market share for precious metals in the United States was 2%. So if debt and deficits and all of the difficulties that you describe begin to play on the American psyche, not to the point in time that they cause panic, but rather to the point that we simply revert to mean, demand for precious metals related investments increases fourfold. And that's my base case. Now,
During the interview, RickRule mentioned the shift towards a multipolar financial landscape and cautioned that issues in Washington is threat to U.S. dollar. Washington's fiscal and monetary policies could undermine faith in the dollar over time. Rick raised concerns about the U.S. Treasury market and discussed the implications of weaponizing the U.S. dollar as a world reserve currency. U.S. 10-year Treasury yields rose, but were last holding steady at the shorter end of the curve after the August employment report. The greenback gained ground against a basket of world currencies in the wake of the payrolls data, but was on track to be essentially unchanged on the week. In a recent interview with CNBC, presidential candidate Robert F. Kennedy Jr. said that the weaponized U.S. dollar is what led to the creation of the BRICS economic alliance. Specifically, noted that the weaponization of the U.S. dollar and weaponization of our foreign policy created the BRICS alliance. Let's get back to interview.
I think a multipolar world is a good thing. And I think that there was no domestic impetus necessarily for the expansion of the BRICS. I think that the biggest enemy of the U.S. dollar is not in Beijing or Moscow. It's in Washington.
Yes.
If you look at what we as Americans made them do, you have to look, first of all, to the fact that the deepest and most liquid securities market in the world is the U.S. Treasury market. And we're doing our best to wreck it. We're doing our best to wreck it because we're wrecking the credit quality of the issuer, the U.S. government. At the same time that, separate and apart from the CPI, which I think is a fraudulent index, we are
CP lie.
Yeah, we're guaranteeing people negative rates of return. When I construct a basket of the goods and services that I buy, I include government in my index, which the CPI doesn't include. And if you measure your cost of living the way I measure mine, the deterioration of the purchasing power of the US dollar is much closer to 7% than it is to 3%. So with regards to the US Treasury, if you buy a Treasury that's yielding you now 5 in a currency that's losing you 7% a year, the real yield on your Treasury is -2. That's not particularly attractive to the Koreans and the Chinese and the Saudis. And if you put on top of that the weaponization of the US dollar, the fact that if the US government doesn't approve of your policies, they can default, they can cancel on the debt you hold. And if you weaponize it, like we did through the SWIFT banking system, the extraterritorial imposition of US values on the rest of the world guarantees the slow motion decline of the US dollar as the reserves currency. The BRIC currency, I think, is a misnomer. It will not be a currency. There isn't enough gold on the planet, almost irrespective of the price you put on gold, to backstop all of the domestic transactions in a group of countries whose GDP is larger than the G7's.
Yeah.
The idea that they're going to have a common currency and politically suborn their individual national interests to the common good of the BRICS is a silly, silly fantasy. However, a gold-backed settlement mechanism where the trade surplus that China enjoys, as an example, with Russia, could be settled outside the US dollar system in gold, I think is a very interesting concept. I actually don't think it's going to occur because I think as little as the Russians and the Chinese trust us, they trust each other even less. I could see a circumstance where Xi went to Moscow and said, you guys owe us the equivalent of $10 billion in gold, please settle up. And I could see Mr. Putin saying to them, well, here's 100,000 bricks. And I don't mean gold bricks. I mean settlement bricks.
As we observe the dynamics of the global financial landscape, it becomes evident that U.S. dollar is facing increasing scrutiny and challenges. Gold and silver's enduring appeal as investments lies in their role as safeguards against currency devaluation. How do you see these precious metals fitting into your investment strategy moving forward? Share your thoughts in comment section below. If you find this video informative, don't forget to show your support towards our channel by giving this video thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more interesting topics. Thank you for watching.